I hope this is viewable to you, right? So this kind of levels are being seen as very strong levels where you see a lot of people coming in. So these are the declines that needs to be, you look at the, I hope you're able to look at this particular chart, see the kind of volumes we have been sharing, and these particular levels are these kind of levels. So you see the kind of volumes, these and almost. So these are big volumes that is coming, and these volumes are coming on the specifically around the dips, almost over here and here. So these are the volumes. You see the rising volume over here, almost if you're able to see. And so with that, we also have our short-term moving averages coming at, that can be 20, 50, or maybe you can use it 21, 35, or Fibonacci numbers, whatever the case may be. But yes, your buying levels 17, basically 50 to 1737. You shouldn't miss these kind of levels. And since we are, if you go by the Dow 30 high top, high bottom, so we should find somewhat a bottom over here. If not, we should act as a short-term bottom, which you will try to utilize to buy for a target price of somewhat 1790 to 1795. So this is Bursa. We can come on to weekly chart as well. You see, okay, so this is one of the range. So we have already seen a retest and overall breakout over here. Depends a lot if we breach 1776, 1777 on closing basis. If we take this out, we must be aware that next levels that we are going to see in market on the long side, on the higher side, maybe in next 2 months, that can be towards 1850, because then there is no stopping it. There has been no stopping it. It's a decent rally. You see, there was not more than 3 weeks when market was down, and any dip was actually utilized. See the kind of pull up in the volume activity over here as well. So a lot explains itself on the chart, and that's what you have to look at as well. So I've already given you two numbers, 1750, 1737. These are the levels, and certainly they will act as somewhat critical support in the short term for specifically long-term buyers, not short-term traders. As a trading idea, it may not get executed. As a swing trade, it may not get executed, because at that point of time, volatility is not on your side. Volatility is on the smarter side. So if you know what are the dynamics, if you know what is the volatility, then you can play it out. But you'll have to have that kind of a patience, which we need to see in basically mature traders. So you need to have that kind of a patience, because in this market you'll see a lot of volatility. And in May month, since I've been telling you that we have already two FOMC meet. We have GDP data coming in at May 26th. That will be revised. It came at 1.9%. We need to see it above that. And Chinese data already came at GDP data at around 6.9%. That's all right, but we need to see this US numbers as well. We already have Trump legislative show today. He can repeal Obamacare, but it has been not much of a show from Trump in the Western market as well. I mean, it's a legislative accomplishment of the Democratic Party that they have been able to win the voting side. And so a lot of reform has been coming, the taxation policy and what's the tax benefits. So there might be a kind of a trigger that can work out as a capital outflow, but that won't be so much in the scenario. So your numbers, though it's a caution of advice. Do give a very critical look to what is happening on the geopolitical front, because recent developments and I hope I'm audible. So yes, recent developments there and the kind of a statement war that we are seeing. Statement war as in statements coming in from maybe Xi Jinping, or maybe North Korea, or maybe Pence from the United States. So a lot of statements are coming now. These statements should send some kind of a jitter. So of course there was a profit booking. That's why you are saying two consecutive downfall. Okay, so we should come to. If you have any questions, please do post. I'll try to answer that. See some of the raised hand for 1 second. Welcome. There should be. So I think you can be able to look at the screen, right? So you come to Straits Times now. Possible targets. Okay. Let me just have a look at the data that has been coming. Okay, Forex Factory. And yes, just hold on. Okay. Unemployment claims. Refreshing it. Now I think it will be able to be okay. So, oh my God, that's a way better data than what one could have expected actually. So you got unemployment claims. You see this at 238. I think that is one of the lowest unemployment claims figure. I think it was 240, but let me see. Yeah, so I think this is one of the lowest data, about the unemployment claims. So this is one of the factors that you'll have to look at the market tomorrow. With that, trade balance and this labor cost quarter on quarter is very, you see the kind of jump 2.5% from 1.7% and sustaining it on quarter on quarter basis. So that's one of the very positive data, and you already have non-farm productivity. Okay, so that was it for the data. Yes, I'm receiving a lot of questions. I'll be coming stocks and KLSE as well, right? The Banda deal. So first, let us look at Straits Times Index. You see the consolidation over here between 3190 to 3130 or 3120. You see the kind of levels and the kind of breakdown we have seen. So that's almost a consolidation which has come down to a breakout point above 3190. So this is one of the breakout points in Straits Times Index, and we have been breached above 3190. We are sustaining above 3190. The next level of resistance we are seeing is straightly at 336. Now that's on a weekly basis, so that may take 2-3 weeks to materialize. What's on the daily chart is a simple continuous uptrend. We don't have to exaggerate our studies on it, or look at it in any critical way, or look at it to find any top, or say and come out with the point that this particular rally is over, or this particular rally looking at. So that is one of the rally. I mean, this is okay. What you can take advantage of this particular chart, and what does this chart say? Okay, we'll go on to quarterly charts. Okay. So we have already seen, market recovering from 2500 to 3200. Many might have missed it. Many might be wanting a correction to take an entry. Now, I'll be very honest over here. When you look at markets like this, there can be short-term corrections. There can be 2%, 3%, maximum 5% corrections. Those are healthy in nature, those kind of corrections. Specifically, when you talk about Straits Times Index, it's one of the deep markets, one of the mature market that is working in place as an equilibrium for not just Western markets but Asian markets as well. So it's in the center, and it is a very mature market. So when you look at Straits Times Index, it is actually giving you a leading signal. It acts as a leading indicator. So whenever there is a rebound in Straits Times Index, you must understand there is a rebound in Asian exchanges. Now see the kind of rally we have seen in the past. See this only 1 week of correction, or 2 months of correction, sorry. and see 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 continuous upside, or maybe 7, right? Here as well, 1, 2, 3, 4. That kind of an upside into a market, 1, 2, 3, 4. You already are having these kind of a correction. So from 2500 we have seen 3200. Maybe this is a 30% upside. Many of you might have not been able to pick up the stocks, might have not been able to enter, or might have missed out the rally. So these are the times, and these are the times you shall utilize as the buying opportunity into the market. It can get to 3100, no issues. It's just 3% in a run which we have seen of 30%. So what you can understand, that this is one of the secular bull trend. In a secular bull trend, all resistances are meant to be broken. So if you see, if someone comes to you and tells that this is a resistance, market may come down, this is the top, this is the point where we can see a downfall, it is all over. I think that that is not something you should be looking at. Any dip, you go for the ETFs, you go for indices, or you can go for specifically REITs. A lot of demand is picking up in REITs. Any stock that is based on export-based stocks, electronics stocks, those are the stocks that you should be looking at, that are going to give you kind of a return. We have seen a exuberant rally in energy and oil-related stocks, but they are seeing a kind of a consolidation. We have seen a nice and decent rally. Okay, so coming on to this is the monthly chart. So this is a weekly chart. It's a clear-cut breakout. See, the last time there was a breakout after a consolidation, what happened? That was almost 2900 back then, and it has come to 3230. That's almost like 10% of the run up. So you don't get these kind of a breakouts. Now coming on to daily chart, there can be volatility. I've said previously as well. As a trading perspective, you may not succeed, but as an investment perspective, you will be creating a lot of money. You see, you got your short-term moving averages coming into the place, so you got to utilize these points as well. Well, coming on to some of the stocks, I think we should focus on some of the stocks that can work well, though I've been looking at some of the charts. Okay, these are the stocks that one can look at. We have had this Specman, very nice stock. Anybody thinking or wishing that one can would want to make money or would want to invest? So you can note it down, you can write it down, or you can look at it, but keep it as a perspective, keep it as one of the stocks you see. What is the importance of 50 days moving average? I mean, 50-day mark clearly gave a buy signal. So Specman for SGX investors, it's a clear buy. The risk reward is favorable. Anybody who's willing to take the risk, maybe 0.131, I think this stock is done for now. Coming not weak, I don't think anybody would be able to survive that kind of a volatility, but yes, I see a good rebound in Specman till 0.170 to 0.175, and one can add this stock into the portfolio. If anybody of you follows the technical, it's a clear-cut bottom fishing, and it's a clear-cut rebound, backtest of the moving average, and then again a pull-up. So these are one of the patterns you would like to see. You'll also be able to see the kind of declines in the volume over here. So volume activity must have been picking up on the daily chart as well. Yeah, see the kind of volume over here. So this is just a second attempt in this stock. One can still look at Specman for an investment perspective. Anybody can look at this stock for what a decent return of 30-40%. Yes, this can definitely give you a return of 30 to 40%. I mean, we are looking at 0.150 on the prices, and we are targeting at 0.170 initially. Now for that prices to retain towards 190 and then make somewhat new highs, so that's almost like 30-odd%. So of course you can keep Specman on your range, and Okay, let me look at, there was this GSS Energy. I'm covering yes, Singapore stocks. So let me look at them. These are some of the penny stocks. That is going to give a short term. So this is a daily chart. There is a rebound. There is a clear double bottom. You got some of the resistance at 0.166. But I think if you look at the weekly chart, this is a clear cut double bottom. GSS Energy is strictly a buy, but the levels had to be maintained. 0.169 is a good resistance. You can note it down. Above 0.169, just hold on. Let me check some indicator in it. Right, so GSS Energy above 0.169, we are again going to target at 0.185. Your stop loss becomes 0.154 in this case, and it's a nice stock. We expect it to retrace to 0.190. Yes, I'll be taking your questions. Just a minute of time. Let me cover a few of the stocks in Bursa, and then we can. What do you think of DNX Hawk? Right, I'll be coming to your question. Okay, so GSS Energy is the second stock. Okay. Okay, I think there is one more stock. Nice movement is seen. Very micro penny stock. Clear cut channel breakout and bottom reversal. It's like, it comes with a lot of risk though, since it's in a overall downward move. Well, but if you go towards here weekly chart, I think it's just based on a risk reward. It has to be very strict, and if anyone wants any kind of low risk, I think at 0.028 this stock has a very strong support. The momentum indicators also looks to be oversold, but it's a buy above only 0.035. Above that 0.035, above that only it's a buy for a swing towards 0.55. Right, so QT vascular only above 0.035. It's a very micro penny counter. Though I like and would certainly ask everyone to look at Specman and GSS Energy. Okay, then let me look at some of the KLSE. Panasonic Manufacturing. One of the blue chip stocks. Okay, comes at 34. So let's first look at a daily chart. This is the daily chart. Not much of a right high top, high bottom continuation. So we expect it to be a higher bottom in place at 33, and our upside comes to be somewhat 35.9, 36. And if you look at the weekly chart, so it's an uptrend and the prices has taken a support at 50 days moving average. We expect PMY to retrace towards 37 and 38 going forward. Though it's a you know a value based stock and might not be might come as a expensive to your trading portfolio. Okay. George Kent, another blue chip. Why am I saying I'm looking for blue chip or mid cap is that the momentum is very strong in these counters, and the kind of momentum we are seeing in these counters. So one can keep this stock. Let me just make it visible one. And any rise above 4.350, one should look at GKent as probable stock that's going to give, you see, the kind of a run. So it can continue, but it has to be above 4.350. And if it continues, there will be a fresh breakout. The volume will be higher, so one can look at GKent as well. Okay, there are too many questions I think that are pending now. We have been having time constraint expect. So first come first, right? First question was by EcoWest. Okay, just so you it's oh my god. EcoWest, what do you say? Okay, this pattern is not that encouraging though. The volume is though encouraging. There's a gap down, so if someone is stuck, I think can hold on to a particular position because if you look at the stock, well, the trend has been up. It's just I think position gap down. The unloading of the position has been there, and a lot of volume we have seen. Though we have seen clarifying statements from the MD Dadok Cyril M. Kang as well that it is temporary in nature. And they are believe it as a temporary shock to the stock. Though yeah, the China and the Malaysia Banda deal was one of the deal it was looking at, and has major shareholder of this particular Skanda waterfront. So that is one of the things this particular stock was getting into. But yes, I think one can hold on to it. The stock has a very strong trend. The bias is extremely bullish. So yeah, one can hold on to this stock if it is still in the portfolio, if stuck at high levels. I think there can be a rebound till, and the gap can be filled by 1.420. Though now since it's been we have seen an increase in volatility, so yes, one should trade with strict stop loss into this particular counter. Well, yes, what's my opinion on China, Banda, KLD, guys. Well, a big boost was, being looked at specifically China was looking at Malaysia as one of the develop over a period of time. And hello, I hope yes, after this particular deal, which has collapsed, it did give a lot of shocks to, especially if you look at infrastructure stocks. Though it was like what a lot was depending on it, somewhat 45 or 46 billion dollars, and I think there will be some kind of a measures. We will be looking at. People will try to come in, specifically government officials, and will try to sort it out over a period of time, since they would be looking at one of the FDI investment theme that people were looking at China, and one of the FDI investment that it was actually looking at as a strategic investment. So yes, I think it will materialize. It may take time how much we cannot time it, but yes. If it has been broken down, and it has been between government to government level. So let's see how it pans out. But still, let us be hopeful, because deals like this, they don't come in the first round of meetings. So of course, there will be some of the efforts. I don't know, from the Malaysian government as well, and from the Chinese officials as well. But any update on this may boost, market sentiment as well. There has been too many stocks. Oxon, Penta, I'll give you a few. Okay, thanks. So I've seen this stock over a period of time, and it has been in the range. It's not able to break out that good. I mean, it's in total control of what do you call it, syndicates. What do you call it, like the numero or operator or syndicates that are working in it. I guess it has to be in the grip of these people, because it is giving false breakouts, and false breakouts are leading to trap the retail investor. You see, a bullish candle next day goes up, comes down. A bullish candle next day goes up, it comes down. So this is clearly a trap for retail investors. Maybe big money pumped in and then got out at very fast speed. So look at this, almost a lot of volume pumping in, and the people are already trapped in this stock. So Parks and Retail, I don't think, if one wants to take a speculative bet, I think speculatively it can again rise to 0.130, 0.134, and it will stop at 0.113, and that can be one worked as a stop loss, and it may rebound to 0.133. Secondly, okay, now another question, I think. Penta, okay. If you have any more questions, please do drop in. I might try to answer them through mail, but Penta Master Corporation, nice stock, giving good movement overall. Volume is much better. What do you need to invest in? I mean, nothing to explain. It's a self-explanatory chart, and I think even if we are asking about it, there's nothing to explain in this chart. I mean, this is a secular bull trend. We try to go to find a top here. I don't think we will be looking at the top over here, but this is a clear-cut breakout. I think 2.980. You can see almost 3.500, 3.560 in no matter of time. see the kind of bullish move this stock is giving, specifically when you have a volume on your side. You see the volume, you have it on your side. That's an average breakout of volume of almost like last 20 days. So of course, Intermaster, it's a clear buy. So I think I'm done over here. A lot of questions there still, but okay, for Sally, MP, since I'll give you an analysis of MP. A lot of volatility you are already seeing. If you can write down the code, that will be very happy, very easy for me. Manage Pay Systems, right? Sideways would be the right word, and downward move has started in this stock. I think that would be the right analysis in this particular counter right now. I don't see it breaking 0.270. Continues to be a resistance until unless it doesn't come off from that level. I think it will be in the sideways. I would be surprised to see this counter back to 0.205, 0.200. So one must hold, even if they're holding this counter, one must hold strict stop losses, and the portfolio shift and the portfolio allocation needs to be looked very critically in these kind of markets, because these markets are almost right. These markets are almost bullish in nature. So if you are stuck with a particular counter that's on a downward move and the market is continuously giving good returns, so one should immediately change the portfolio and the stocks an investor is holding. So I hope I'm done. Any more questions left? Let me see. Yes, I've got a new K group. Please, right? If you can just write down the D next, right? Sorry, Aniza, I have not. I'll answer Aniza first, then I'll take K group. Let me look at D next. The Gangan exchange, right? If you have any, kind of a buying level or selling level, you can also ask that DNX is still a buy. So still a buy. Okay, let me look. See, these kind of charts, first thing we should ask ourselves is that would you be able to take that kind of a risk? Because it's like catching a falling knife. I mean, oh my God! You look at the chart. So it's a still buy. Well, let's go for a long-term perspective though. If someone wants to add to their portfolio or someone is looking, yes, the breakout is clear. But I think 0.690, 0.700 maximum. You need a lot of volume to break these levels. You see, the last time this stock was at these levels, see the kind of a fall towards micro penny from mid cap stock. So certainly that's way too high level to buy. Any dip towards 0.450, go for it. You should be one of the buyers of this particular stock is 0.450. Why? Because the breakout is, yes, it's visible, it's long term. The underground story is changing in this particular counter. So one can look at this particular DNX above. Okay, here's a safe bet. Above 0.760, 765, good to enter. Go for 1.5. It can double, 200% return. But until and unless it's not breaking 0.760, I don't think this stock has much more legs. I mean, people would like to now book profit at these. Even in fact, people who are stuck over here, wouldn't they be booking profit, right? So I hope the answer is quite clear, Haniza, that you should look at 0.450 rather. Your risk reward becomes much favorable at that point of time. Okay, last but not the least question first, K group. K group, then will be off. K group, yes. Okay, this stock, first the chart structure is not good, it's a clear stock which has a firm grip of syndicates and operators on it. To kind of move this stock suddenly from 0.77 to 23 ringgits, 0.23, and coming back to, so that's a trap for investors specifically. See, you haven't seen that kind of a volume when this was the stock was running, and suddenly when it is at 52-week high, maybe 2 years high, 3 years high, see the volume when it's sliding down. That's like clear someone had accumulated this stock at these levels, so this is totally in grip of syndicates. Should be away. You have anything in this particular stock, a buying position, a holding, then get out. It will again give that kind of opportunity, because that has been happening. You look at it, 2011 went up, came down, brief consolidation, 2 years, went up, came down, long brief consolidation, again people are trapped in it. It will take a lot of consolidation in this stock. So if you are one of the players who is looking to make a lot of wealth in this market, should try to book losses, but this stock will take a lot of consolidation. If you are ready to wait for 2-3 years and then enter into the market again, well, you can hold on to this stock, but I would still suggest book a loss once, and then you can earn much better in this particular stock, market, right? So I think that is it. Any more questions, I'll try to answer through mail, and thank you everyone for being part of this webinar. I think it was a nice having you all. A lot of things discussed, a lot of trading ideas being discussed, and thank you. And we'll meet again in next webinar. We try to do these kind of webinar to educate and share and reduce the learning curve of our clients and traders across the world, and share that kind of a knowledge, because trading is a very so trading is a very hard thing which one cannot do alone. There has to be a knowledge sharing, and there has to be a lot of quick WA. So I think that is it. We'll meet again, and thank you. Have a happy weekend.